we go to the question itself. This is the question. Falcon, a successful business, agreed to take over Sparrow. There are two businesses, Falcon and Sparrow. And Falcon decided to take over Sparrow, and their summarized balance sheet as at April 30, 2007 were as follows. The balance sheet of both the parties, both the companies is given below. Fixed assets, stocks, debtors and bank accounts are given below, and you can see them. And it was agreed that Falcon would pay $18,000 from the business bank account to take over all the assets and liabilities of Sparrow. The assets of Sparrow would be revalued as follows. Fixed assets would be revalued as 12,500, whereas it was 12,000. Stocks would be revalued as 2,400 and debtors would be revalued as 1,300. And what we are required to do is to calculate the goodwill which Falcon has paid to Sparrow, and to prepare a balance sheet after the takeover of Sparrow. Okay, now we go to the next slide. This is the solution to the question. First is solution of A, goodwill. How to calculate what is goodwill? Goodwill is equal to purchase price minus net value of assets taken over, and purchase price which Falcon has paid to Sparrow. Net value of assets would be taken over. Assets taken over is equal to assets taken over minus the liabilities. This is the formula for to calculate net assets. And net asset, the fixed assets for Sparrow is 12,500, which were revalued. It was 12,000 and it is now fixed assets are revalued as 12,500 plus stock as 2,400 and plus debtors as 1,300. These are the assets. And bank also, in the bank we have Sparrow had $500 in the bank. Now the creditors would be deducted from these assets, minus creditors $1,500, and the net value of the assets would be 15,200. Net value of the assets would be 15,200. Now how to calculate the goodwill? Goodwill is equal to 18,000, the price paid to Sparrow by Falcon, minus 15,200, the net assets taken over, is equal to 2,800. This is the value of $2,800 is the value of goodwill. Now we go to the B part, that is to prepare a balance sheet after takeover. And first item to be taken over is intangible asset, that is the goodwill, that is 2,800 as calculated above, and fixed assets is equal to 75,000 plus 12,500, the fixed assets taken over from Sparrow, and total of the fixed assets would be now 87,500. and current assets, how to calculate the current assets, is equal to stock 14,500 plus 2,400, that gives us 16,900 as the stock, opening stock. Debtors would be 9,500 of Falcon plus 1,300 taken over of Sparrow, and totaling is 10,800. And bank amount is 20,000 of Falcon plus 500 of Sparrow minus 18,000, which is paid out to Sparrow, this is paid out to Sparrow, and we are left with a bank amount of 2,500. And if we total it, then the total current assets would be 30,200. And now we have to deduct the creditors from this current assets, from these current assets, that is 19,000 creditors of Falcon, and plus 1500 of Sparrow. If we total it, then we get a figure of 20,500, and the total for if we total it and deduct it from current assets minus the creditors less creditors, we get a figure of 9,700. That is, this is the working capital, and the total assets, that is 2,800 plus 80,500 plus the working capital, we get a net assets of 100,000. Okay, and this we know that net assets of any company is equal to the capital of that company, and this would be the capital of Falcon. 100,000 is the capital of Falcon. Now we conclude, this is the solution to this question, and we conclude this slideshow, and you are very much requested to kindly remember it, practice it, and to subscribe the channel and to share it with your friends. Thank you so much. Allah Hafiz.